Welcome to the Global Updates, your source for breaking news and trending stories from around the world. Oil shock China and Canada. Forge energy alliance, leaving US out in the cold. The energy world is changing. The landscape of global energy alliances is shifting dramatically. A new alliance is forming. China and Canada are now partners in a significant energy deal. China and Canada have struck a major oil deal. This partnership is set to reshape the global oil market. This agreement has stunned the United States. The news has sent shockwaves through the American energy sector. It sidelines American energy producers. U.S. oil companies are now facing an uncertain future. Former President Donald Trump's trade policies are a major factor. His administration's approach to international trade has had lasting impacts. His actions helped create this unexpected partnership. The ripple effects of these policies are now being felt. This deal signifies a dramatic shift. The global oil trade routes are being redrawn. Global energy dynamics are being rewritten. The balance of power in the energy sector is changing. China is seeking energy security. The country is looking to secure its energy future through strategic partnerships. Canada is eager to fill the void. The nation sees this as an opportunity to expand its energy exports. The United States finds itself increasingly isolated. The country is grappling with the consequences of its trade policies. The future of American oil hangs in the balance. The industry is facing significant challenges and uncertainties. This is a story of unintended consequences. The ripple effects of trade policies are far-reaching. It's a cautionary tale about the true costs of protectionist trade policies. The impact on the global stage is profound and lasting. America first, energy last? This phrase encapsulates the paradox of Trump's trade policies. Trump's trade wars upend global energy markets. The global energy landscape was thrown into disarray. Donald Trump promised to put America first, a slogan that resonated with many. His trade policies, however, had ripple effects across the globe, affecting not just the US, but the entire world. This was especially true in the energy sector, where the stakes are incredibly high. Trump's trade war with China was a defining feature of his presidency, marking a significant shift in US foreign policy. He slapped tariffs on billions of dollars worth of Chinese goods, aiming to curb China's economic rise. This was meant to protect American jobs and industries, a key promise of his campaign. The impact on the energy market was significant, causing fluctuations in oil prices and stock values. China, the world's largest energy consumer, was forced to look elsewhere for its energy needs, diversifying its sources. The trade war disrupted established supply chains, leading to delays and increased costs. It created uncertainty in the market, making investors and businesses wary. This set the stage for new alliances and unexpected partnerships, as countries sought to navigate the new landscape. The old order was crumbling, making way for a new era in global trade and energy markets. Tariff, tit for tat, a trade war timeline. The trade war between the US and China was a complex dance of tariffs and retaliations. It began in 2018. Trump imposed tariffs on solar panels and washing machines from China. This was followed by tariffs on steel and aluminum. China responded in kind. It placed tariffs on American goods like soybeans, pork, and crude oil. This back and forth escalated throughout Trump's presidency. The tariffs affected a wide range of products. This disrupted global trade and increased costs for businesses and consumers. The energy sector was particularly vulnerable. China, hungry for energy to fuel its growing economy, was forced to adapt. Closing the door on American oil. How tariffs redrew the energy map. The tariffs imposed by China on US crude oil were a turning point. This made American oil more expensive for Chinese buyers. They started looking for alternative suppliers. This was a blow to the American oil industry. It had hoped to capitalize on China's growing energy needs. The tariffs created an opening for other oil-producing nations. Canada, with its vast oil reserves, was well positioned to step in. Its proximity to the United States and its existing energy infrastructure made it an attractive alternative. The trade war, ironically, paved the way for a new energy partnership that excluded the United States. Northern exposure. Canada steps into the void as China's new energy partner. Canada seized the opportunity presented by the US-China trade war. It deepened its energy ties with China. The two countries signed a series of agreements. These deals focused on increasing energy cooperation. Canada had found a new and eager customer for its oil. This partnership was a win-win for both countries. China secured a reliable source of energy. It reduced its dependence on the volatile Middle East. Canada gained access to a massive and growing market for its oil. This helped to offset the losses it faced from declining exports to the United States. The pipeline-to-partnership Trans Mountain expansion fuels China-Canada energy bond. The expansion of the Trans Mountain pipeline symbolized the growing energy ties between Canada and China. This pipeline carries oil from the Alberta tar sands to the Canadian coast. The expansion project, completed in 2023, significantly increased its capacity. This project was met with controversy. Environmental groups raised concerns about its impact. Indigenous communities also voiced their opposition. However, the Canadian government pushed forward. They argued that the pipeline was essential for Canadian energy security and economic growth. The expanded pipeline opened up new possibilities for Canadian oil exports, particularly to Asian markets like China. Echoes of trade wars past. From Australian barley to American oil. This chapter delves into the intricate web of international trade and the ripple effects of geopolitical tensions. The China-Canada oil deal serves as a stark reminder of the far-reaching consequences of trade wars. When nations engage in economic battles, the effects are felt across the globe, impacting industries and economies in unforeseen ways. It echoes similar situations in recent history, where trade negotiations and agreements have been pivotal in shaping the economic landscape. The delicate balance of international trade can be easily disrupted, leading to a cascade of economic repercussions. Australia, for example, faced China's wrath when it called for an independent inquiry into the origins of the COVID-19 pandemic. This bold move by Australia was met with severe economic retaliation from China. China responded with tariffs on Australian barley and other goods, a move that sent shockwaves through the Australian agricultural sector. The imposition of these tariffs was a strategic maneuver to exert economic pressure. These actions had a significant impact on the Australian economy. The agricultural sector, in particular, saw a sharp decline, with barley farmers bearing the brunt of the economic fallout. It forced Australian businesses to diversify their markets. Companies had to seek new trading partners and explore alternative markets to mitigate the losses incurred from the Chinese tariffs. It also highlighted the risks of relying too heavily on a single trading partner. The situation underscored the importance of having a diversified export strategy to safeguard against geopolitical risks. The United States, in its trade war with China, seems to have fallen into a similar trap. The ongoing trade tensions between these two economic giants have led to significant disruptions in various industries, including the American oil sector. The lessons from these trade wars are clear. Economic interdependence can be both a strength and a vulnerability. A new energy order, long-term implications of China's pivot and America's isolation. The China-Canada oil deal is a symptom of a larger shift in global energy dynamics. China is actively diversifying its energy sources. It's reducing its reliance on any single country. This is a strategic move to enhance its energy security. The United States, meanwhile, risks isolating itself in the global energy market. Its protectionist policies have pushed away potential allies and partners. This could have long-term consequences for American energy producers. They may find themselves struggling to compete in a world where China is calling the shots. The uncertain future of American oil in a realigned world. The future of American oil in this new energy order is uncertain. The U.S. remains a major oil producer, but its influence on the global stage is waning. The China-Canada oil deal is a stark reminder of this new reality. American oil producers need to adapt to this changing landscape. They need to find new markets for their products. They also need to navigate the complexities of a world where geopolitical alliances are shifting. The era of American energy dominance may be coming to an end. The question is, what will take its place? The global ripple effect of the China-Canada oil deal. The ramifications of the China-Canada energy alliance are being felt worldwide. Countries are re-evaluating their own energy strategies. Europe is seeking alternative suppliers to ensure energy security. In Africa, nations are exploring new partnerships to boost their oil exports. The Middle East, traditionally a dominant player, is watching closely, adjusting its policies to maintain its influence. Even within Asia, countries like India and Japan are recalibrating their energy imports to navigate this new landscape. The China-Canada deal is more than a bilateral agreement. It's a catalyst for a global energy shift. The world is witnessing the dawn of a new energy era, interconnected and interdependent like never before. As the world adapts to the shifting energy landscape, the United States faces critical choices ahead. The China-Canada alliance has underscored the urgency for America to rethink its energy policies. With traditional alliances disrupted, the U.S. must explore new avenues to secure its energy future. Show image of U.S. Capitol building. Innovations in renewable energy sources, like solar and wind, present promising opportunities. Investments in technology and infrastructure could pave the way for a more sustainable and independent energy strategy. Show video clip of solar panels and wind turbines. Furthermore, strengthening ties with emerging energy markets in Africa and Latin America could open new doors for U.S. energy exports. Show video clip of oil rigs and pipelines in Africa and Latin America. Policy reforms that incentivize energy efficiency and sustainability will be crucial. By embracing a diversified energy portfolio, the U.S. can mitigate risks and enhance its global standing. Show video clip of energy-efficient buildings and smart grids. Show image of the American flag waving. The path forward demands strategic foresight and collaborative efforts. The future of American energy is at a crossroads, and the decisions made today will shape the nation's trajectory for decades to come. Show video clip of a diverse group of policymakers in a meeting. With the right strategies, the U.S. can emerge stronger, more resilient, and ready to lead in a new era of global energy dynamics. Show video clip of a sunrise over a city skyline.